Good afternoon. This is Chris Rowe. I've been analyzing and trading stock and options for about 13 years. Worked on Wall Street managing money for about 9 of those years for individuals and institutional investors. Welcome to the Tycoon Report weekly market wrap-up. We decided to put these videos together because of the recent market turbulence you've been experiencing. You know, sometimes the market's really ugly. You don't want to read it, and it's like you fought 12 rounds with Mike Tyson after you get beat up in the market so much. You just want to look at it for 5 minutes and go back to enjoying your life. So every Monday at about 6:30 or 7 o'clock, we give you the quick market summary, and we show you that there's always a bull market somewhere. So let's look at what happened in today's market. This just shows you that the market was down about 3%. But there's something much more important that's going on in the market right now that I'm going to get into in just a second. But what happened, most of the day the market was up, and right at the end of the day the market really just tanked by about 3 or 4% because, again, it was up a little bit throughout the day. Let's take a look at what happened. Well, here's the S&P 500. Here's a 5-day intraday chart. This, what you're looking at right here, is today's activity. And you can see, like I said, the market was up and then dropped like a rock in the second half of the day, especially in the last half hour of trading. You can see right here. This is the 3% drop that I'm talking about. Now, what's very important right now to take a look at is that the market just broke another 5.5-year low. Markets that break lows continue to go lower. We were looking at trying to work out perhaps a triple bottom, and that was violated on Friday, let's be honest. But today there was a glimpse of hope that perhaps the market would rebound. This is a 6-month chart. You can see the blue line shows you what the support level was, where the market had closed here at about 900 on the S&P. All the indices look pretty much the same. And, on Friday it was violated. People were kind of in denial, didn't want to believe it. Today, after, Asian markets tanked from 6 to 12.7% overnight, people were expecting a bloodbath on Wall Street. Now, if you remember on Friday what happened, the futures were down as much as they could possibly be before the market opened. People thought that you were going to get maybe a 10% decline in the market, but it held up pretty well. So today you got some hope too, bucking the trend of the Asian markets, but then right in the end of the day, like I said, we got smashed. Here it is again, the intraday activity. So what happened? Well, as you could probably guess, obviously economist estimates for economic activity had been scaled back enormously. Over the last months and even the last weeks. Here's today's sector activity. You can see that, of course, energy and materials, basically commodities, took it on the chin the hardest. And again, we're talking about a global economic slowdown, so it means less building, less energy, less metals, and so on and so forth. Here's take a look at what happened in the last 5 trading sessions, and you can see again commodities are the ones getting hit the hardest. And again, that's just a direct reflection of the decline in the economic activity and the global expansion that we're looking at, especially out of Asia. Hong Kong's Hang Seng Index tanked by about 12.7%, and now is said to be margin selling. People buy stock on credit, and when the markets tank, they're forced to sell. So the global markets tanked last night on economic fears of obviously the worldwide recession. Japanese stocks were just mashed as the yen strengthened against most of the global currencies. And, I told you in past market wrap-up videos that the yen was the currency to play. FXY was the ETF you could have done it with. And Asia's just been getting hit especially hard. The Nikkei declined by about 6.4%, not as bad as Hong Kong's Hang Seng Index. But that was its lowest closing level since 1982. So, and again, that was a direct reflection of traders worrying that the strengthening in the yen is going to take a major toll on Japanese exporters. And so even though Japan wasn't as aggressive, they played it pretty conservative with the subprime mortgage-backed securities, they're still taking it on the chin because the rest of the world's suffering and Japan is an exporter. Anyway, there was a big, the big rally in the yen prompted the G7 to issue a statement, and they were warning about the excessive gains in the yen. What else happened today? Well, the markets, like I said, in the first half of the day, they were up because of the new home sales report rose in September. New homes rose an estimated 2.7% in September, and that's a seasonally adjusted annual rate of 464,000 new homes. The housing market it appears that the bar had been set way too low. So, I mean, they basically just completely lowered expectations, and they came out with a rise in September, and that kind of gave people some false hope. But, you know, don't get your hopes up, because government statisticians have low confidence in these numbers, and the numbers, it's just a monthly report, and that's subject to large revisions and sampling and other statistical errors. So don't get your hopes up. Nationally, the sales in September were down 33%, so you can compare that to, compare this September to the September of 2007, we're down 33%. Regional banks got about $31 billion or more from the Treasury. What else happened today? No big deal. Crude closed at $63.22. Hey, at least gas prices are cheap. But what's interesting now is that when you see the market up and crude is up, and the market was down, crude is down. We used to have an inverse relationship to crude oil, because with oil and gas so expensive, it really wore on your wallet. But the problem is now, with worries of a worldwide recession, that's causing commodities to drop. And whenever the fears increase of worldwide recession, that causes the market to drop. Anyway, let's just get right back. Let's get right into there's always a bull market somewhere. Let's take a quick look. And this is going to be very obvious to you folks, but again, FXY, this is the yen. Now, this has made a pretty big run so far. I'm going to have to give you an update on the yen. If you want to look at how to take advantage of some, some hidden treasures, some things to keep on your watch list, perhaps to put in your bullish shopping list for when the market really tanks, which it probably will. Read tomorrow's Tycoon Report. If you're not signed up, go to the tycoonreport.com and sign up for the Tycoon Report, and you'll get it mailed to you. I have 3 Chinese stocks that you should be looking at. Again, these are not recommendations to buy right now, because the markets look like they're really going to tank. But, these are things that you want to look at for long-term plays. People are forgetting all about China. And these are going to be 3 stocks that you should look at. And I'm going to do a series, so every single week you're going to find Chinese stocks to keep your eye on that are poised to benefit from Chinese growth. People are forgetting all about that. Globally, growth is slowing. Growth in China, definitely slowing. But this reflects in the stock's price, and some of these stocks are down. And the market, Shanghai is down about 70% so far. Anyway, just giving you a heads up for future prospects. FXY is what you're looking at right now, the currency. Wait for a pullback and possibly an update from me in future Tycoon Reports. And I'll talk to you next week. Again, go back to enjoying your life, and I'll see you next Monday.